Will Carnival Cruise stock, ticker symbol CCL, sail higher or lower, as it has been doing for the past year every time it was trading around this $19 price level, as you can see from the charts? This price level has been a strong resistance, rejecting the price down lower every time it traded here. But this time, it could be different because we detected unusual option activity on the last trading day. So in this video, we will analyze this trade by a wealthy investor who may have access to leaked insider information, and then show our trading strategy, which reduces the risk just in case price gets rejected down lower again. So without further ado, let's dive into the data as usual. So on the options time and sales tape, as we can see here, 15,000, 3,000, and 782 contracts being traded about the same time for these July 19 options. And since these options are expiring, we know these are closing trades. And so the opening trades are these August 16 options. So we can calculate the total trade cost by adding the number of contracts, 15,000 plus 3,000 plus 782. And since they paid about $63 for each of these call options, we multiply that and we get a total trade cost of about $1.1 million. And when we take a look at the chain, at the August 16 options, at the 19 strike calls, we can see that there was 8,000 open interest, greater than the volume of 28,000. So we know that these 19 strike calls are opening trades where they were buying these for about $63 each. And so when we analyze this trade on the risk profile profit loss graph, x-axis is the share price of Carnival Cruise. You can see as the share price goes up, these options gain positive in profits. If it goes down, negative loss. So we know that these options are going long on Carnival Cruise. Now, even though this trade was at least $1 million in value, this does not necessarily mean it's a high chance of profit trade, because we have to analyze additional data to make that kind of determination. For instance, these July 19 options that they closed and rolled to the August options, we can see that it was on June 27 that they opened these July 19 options at the 18.5 strike calls, 28,000 being traded, clearly opening trade since the open interest was just 616. And you can see how much they paid here, around $62 to $66 each. But they are at a loss because Carnival Cruise was trading below $18.50 on July 19. So these options were out of the money. And that's why they rolled their options to another expiration date and another strike price. So this is considered a lower chance of profit trade. And so if you are interested in the higher chance of profit trades, then make sure to go to our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
We'll put a link at the top here where you can gain access to the trades that have a higher chance of profit based on the analysis of additional data. And as an example, one of our recent membership trades, since we're discussing cruise lines, was actually another cruise stock. This one here, okay, for our members only. On June 10th last month, RCL, Royal Caribbean Cruises, where we analyzed more than $2 million of unusual trades. You can see these calls that were being bought. And so we told our members to go long bullish. And if you take a look at Royal Caribbean Cruises now, it's near its highs. And so you can see we have been profitable on our trade for our members only. So that is what we mean by higher chance of profit trades in comparison to stocks like Carnival Cruise in this situation because of the higher risk data. And that is why our strategy includes hedges. Okay, so what is our strategy? Let's take a deeper look. For the August 16 options, what we did to hedge our trade, you can see our hedges over here at the 17 strike puts, our position here where we bought these and we sold the 14 strike puts. Okay, so we bought the 17 strike puts, sold the 14 strike puts, but we also wanted to go long because the data was going long bullish. So we went to the October 18 options at the 19 strike calls. We bought these and we sold the 25 strike calls. And so when we analyze this, you can see here, this is what our trade looks like. It costs about $150 of debit each. And as the price of Carnival Cruise goes up, gains in profits. But if price gets rejected again and goes down, you can see that our loss is reduced here. In fact, if it goes down substantially more, it becomes positive profits because our put hedges become very profitable here. Okay, so when we take a look at the Greeks, you can see that we are still going long bullish because our delta is still a net positive. But we want to make sure to reduce our risk by using options. And so strategy is always very important as well, not just picking the right stocks to diversify our portfolio. And so if you want to learn more, make sure to go to our website where we share more of our trades that the wealthy investors are trading and our option strategies that substantially increase our chance of profit. Let us know in the comments below what you think will happen to Carnival Cruise. As usual, please smash the like button, subscribe if you haven't. Take care and have a great day.